Overview of Islamic capital market and its significance in the global financial system. Have you ever wondered how money could grow ethically without touching interest, gambling, or risky guesswork? Or maybe you've heard of Islamic finance, but thought it's just for Muslims or only relevant in certain countries? Well, think again, because the Islamic capital market is transforming into a global powerhouse of ethical, inclusive finance. So let's start with the basics. First, a capital market is essentially a marketplace where long-term funds are raised through stocks and bonds. The Islamic capital market does this too, but ensures it happens ethically according to Sharia principles. This means that while money still circulates purpose, every transaction must avoid three key things: interest, riba, gambling, maisir, and ambiguity, gharar. It's all about ethical investing, risk sharing, and funding things with real economic value. So, what does this market actually consist of? It boils down to three core areas. You have Sharia-compliant stocks, the Islamic equivalent of shares. Then there's sukuk, which are Islamic bonds or fixed-income assets. Finally, you have managed investments like Islamic unit trusts, exchange-traded funds, and real estate investment trusts. It runs in parallel with the conventional market, but with its own compass. Now here's where it gets really interesting. The Islamic capital market is a booming sect. Let's break it down by its main components. First, let's talk about sukuk, or Islamic bonds. The market's performance is set to continue strongly. According to a January 2025 forecast from S&P Global Ratings, total global sukuk issuance is projected to reach between $190 billion and $200 billion in 2025. Driven by high demand in core markets like the GCC and Malaysia. Next, Sharia-compliant equities. These stocks form the bedrock of the wider Islamic finance industry. As reported by Straits Research, the global Islamic finance market was valued at $3.38 trillion at the start of 2025 and is forecast to grow at over 9% annually. Sharia-compliant equities represent a massive and foundational piece of this thriving multi-trillion-dollar ecosystem. Then Islamic assets under management, which includes Islamic funds, REITs, and ETFs. This is where we see huge future potential. According to the business research company, the Islamic fund sector is on a rapid growth path, forecasted to expand from approximately $8.9 billion in 2025 to nearly $13.9 billion by 2029, demonstrating a powerful compound annual growth rate of over 11%. This isn't just happening in Malaysia or the Middle East. Countries like the UK, Luxembourg, even South Africa and Hong Kong are jumping and issuing sukuk to attract global investors. Why? Because the Islamic capital market isn't just about religion. It's about values like fairness, transparency, and sustainability. There are 5 big reasons why the Islamic capital market matters in today's world. It's growing fast. It is not a niche market anymore. It's a global force. As of early 2025, Malaysia's Islamic capital market alone is valued at over 2.6 trillion ringgit. In the Gulf, Saudi Arabia is a powerhouse, dominating global sukuk issuance alongside Malaysia. And Indonesia, with the world's largest Muslim population, has a rapidly expanding Sharia-compliant sector with outstanding sukuk valued at over $100 billion. It fuels tangible development. Sukuk are frequently used to fund major infrastructure. We're talking about the highways, power plants, and hospitals that build nations. This is especially vital in developing economies. According to the Asian Development Bank, Asia's annual infrastructure funding need is immense. By providing a stable, asset-backed source of funding, the Islamic capital market directly helps close this gap. It promotes financial inclusion. Millions of people who avoided conventional finance for religious reasons. Now Islamic capital market opens the door. It gives them access to regulated and ethical investment and financing opportunities, allowing them to save for the future and participate in economic growth with peace of mind. It provides stability and mitigates risk. Because Islamic finance instruments must be tied to real assets and prohibit pure speculation, the system has proven to be incredibly resilient. A real-world example is the 2008 global financial crisis. While conventional markets were rocked by the collapse of speculative, debt-based products, the International Monetary Fund, IMF, noted that Islamic banks and their financial instruments remained relatively stable, shielded by their core principles of risk-sharing and avoiding excessive debt. And finally, it's a natural leader in ethical investing. Its principles inherently screen out harmful industries like alcohol, gambling, and weapons manufacturing. But its importance goes far beyond that. The Islamic capital markets focus on transparency, fairness, and real economic activity perfectly aligns with the global shift towards ESG investing. Right here in Malaysia, the Islamic capital market isn't just part of the system, it's our backbone. We've got one of the most developed Islamic capital markets in the world. And that's not just a bold claim, it's backed by robust regulation and supervision by the Securities Commission Malaysia. Did you know? Malaysia's model has become a blueprint for other countries looking to develop their own Islamic finance ecosystems. We're not just participating, we're leading. So next time you hear Islamic capital market, think global. Because no matter if it's funding billion-dollar infrastructure, supporting ethical portfolios, or opening doors for new investors, the Islamic capital market is shaping the future of finance.
Get bullish about learning.